Yeah, so this is the Confluence strategy. Uh, Firstly, let me go through the parts. So we have the pivots. We have selected the Camarillo pivots because they work pretty well. Use daily waste values and select the S4, S5 and R4 are there. So if that remains, that's fine. And then next you have the Bollinger Band where you set 20 SMA, which is a normal standard deviation of 2. It's fine. Just select the time frame to 1 hour. That's really fine. Style is normal, whatever you can prefer. Super trend is a little bit different here. We normally use super trend 10 2 factor, but here the ATR remains 10, but we use the 1.5 factor ATP like super trend. Just the same volume. It's good to have volume. Turn on the volume MA, which is very helpful to understand the pattern of the volume. You can do that as well. And use divergence main indicator, which is normally what we use, and which is a very good signal for signal provider for divergence in the lower time. So normally we would not use it like this. This clusters the chart a lot. You would normally use the only last divergences. So show only last divergences and trade according to that. This will only print the last one, make the chart a lot cleaner, which can be helpful. But because we are talking about the strategy, I'm just going to leave it running for now and do check in all these boxes and check the internal, like external indicators as well. So, and external indicator is on close, not which is possible. Yeah, that's about it, I think, on the strategies. Oh, sorry, there is another part is which is the RSI 60 minute. Uh, this is 1 hour, SMA 14, RSI minute is also 14. To keep that and like both your website division of 2, that should be fine. And we just go on to trade. So, what are the different metrics and like that are very vital here? What are we looking for? So, if we zoom out, let's zoom out. We're looking for compressions uh, such as these. This is a large compression. When you see compressions like this and you see the breakout from that, so the compression is going on for a long time, few days, even. So this is going on for a few days. It's not that we are not trading this environment, which we might be trading in this environment. But when this breakout happens, that's your cue to enter a good, better trade. This is your confident move when the Bollinger Band suddenly expands and explodes. And obviously, for the altcoin and oil as well on the other test, you will have the AVF. If that is happening from the AVF level, that is even a bigger signal, better signal for you to go stronger with that trade. So after the breakout, it has retested the retested what the super trend, and then it continuously tries to explode for a few months. So that is only the case. So this trade is only going to be made when you have a long-term compression. So this is a long compression. The downside break happens. Then again, this is a long compression for I think 14th May, yeah, almost 15 to 20 hours of compression here. So for a 5 minute trading desk, that is a huge size of compression. It's not that you're not trading inside the compression. It's only that this is a better trade when you see this explode uh, in the Bollinger Band. You will also see that the RSI is also changing. So RSI has been bullish for quite a bit and then suddenly explodes. So that's your cue. That's your bigger trade. Similar to many other cases like this, maybe before even when we have operations. So it is important to keep looking at what is happening in the price on a larger scale, not just trade the 5 minute. So these environments, when the volume band is low, this environment, this is very compressed. These are important. This is a compression. So you have to see what is happening on the larger scale of price. This is a compression again. Uh, this is a compression again. So these things you have to keep in mind. Compression again. So while trading, Bollinger Band is based on compression and expansion. Once Bollinger Band is compressed, a trend is coming. You don't know the direction, but a trend is coming. That is certain. And if that, like I said, objectively falls in with your longer term supports, like this one, and this one, and this one, that is even a better signal for you. And yeah, obviously we have the volume of peak as well. Now, how do you use the Bollinger Band for trading the super trend reversals in the short term? So what we want to do is never never be in a trade that can be overly risky for us. For example, uh, we were maybe on the on this bullish trend, and as soon as this is closing below, we are out of the trend. But does that mean we are taking the opposite trend? We can, depending on the time. If you have this, if you still have the time, you can enter the downside trade because we are outside you know, the Bollinger Band because we are very up, but it's sloping very up. We are also tagging the higher trending range of sorry, RSI. We're also tracking higher volume than average. The volume MA is still quite high with respect to the what where it was. So on a partial entry, you might even short here. It's not it's not a bad short, I'd say, but you have to also remember that we are on the expansion from a really strong level. So that is why it should deter you. I'm not saying that this is not a trade. You can make that trade and close it in the next one, but it should deter you in these environments to not take the short and wait for the again bullish breakout. So the bullish breakout again close. Bullish breakout, you ride that, you close it. Bullish breakout, you close this one in a loss. Bullish breakout, you close. Now you see the Bollinger Band is flattening. Now you see the RSI is flattening. So these things over the time you have to slowly understand. So you see the RSI MA is flattening. It's the yellow one. The MA is flattening. You might want to like this is inside the this is not anymore outside. This is now this is not from outside. This is not coming from outside. This is now coming from the inside. Even in this case, it came from the inside. It was still rising, but again, it would be understandable with partial allocation entries in these areas because they are very overbought in nature. But in this case, it works. In the next case, somewhat works depending on the profit taking. The following cases, it becomes a little cross, but it generally, again, should work maybe close and break even or slight losses, which does not matter because this is the law of average. This is the higher trading time frame and capturing the higher gains like this. So you want to capture the larger trade. So if you enter, this is again a partial entry because this is flat again. The RSI is still falling, the volume is still falling, and you are getting a signal from the lower Bollinger Band side. This is partial entry probably. You might be closing around the middle Bollinger Band. Again, this middle Bollinger Band is breaking with super trend signal, with RSI getting just a bit positive. You might want to enter this one, but it doesn't work obviously. It goes flat. The next time this bar is confirmed, and if you zoom out, you'll see that this was a mini compression which is breaking out. This is a mini compression that is happening here, and then the Bollinger Band midpoint is confirmed and breaking out. RSI is confirmed. Volume is just about picking up, and you have a larger breakout. Uh, which is large in size, and yeah, that's going on. So the idea is to catch the differential trades and all trades. In that case, could be differential. So that's why we need to enter most of what we can enter. Definitely, maybe not these ones. We are close to the lower boundary. We are not still yet falling. Bollinger Band is in compression. You don't want to possibly short around these levels. But even if you do with a partial entry, that should be fine because you're taking the opportunity and you're being uh, mm, like hunting for opportunities in a sense. And as long as you take the larger opportunities, these short opportunities should be fine. So that's the idea. Catch the whole of these moves. You'll see it in the signal closing signals. You don't have any stop loss. You only stop loss when you like super trend changes. In the profit taking as well, that should be the motto. Pivots are not end of all. Pivots are only there to help you understand the price action. They are not a signal. Bollinger Band is only there to understand the price action. They are not a signal. Only signal generated here is super trend. So it is based on super trend and the condition of the other things. You will make your decisions. They are not again. They are not deciding. So like for example, this larger breakout from the compression, we are trading above the pivot, but that pivot is that much closer because we are having that compression. So when compression happens, your pivots will get nearer. You can see zoom out the price and check this easily. So when your compression happens, so this is a compression, your pivots are getting nearer and then is getting wider when as soon as the breakout happens. It's nearer. As soon as the breakout happens, it's far wide. So that is the nature. That pivot also tells you when a compression is ongoing. The uh, pivots will get nearer. So that is a sign of a compression, and probably time for you to look at the Bollinger Band in a deeper context to catch that upcoming trend. It will help you understand the price dynamic. It is not always that it is able to do that, but it is a very good signal nevertheless. Uh, so all these are confluence. The strategy's name is confluence. So RSI is creating a confluence. Uh, your your this Bollinger Band is creating confluence. The pivots are creating a confluence. The volume is creating a confluence. The divergences obviously are creating a confluence. Uh, they are creating confluence. You will see a lot of divergences. So you don't really have to trade the divergence. You trade the confluence. You analyze the RSI, you analyze the Bollinger Band, you analyze the divergences, you analyze the super trend, you analyze the price action where it is, and then make the call for your TP, for your SL, for your like entry. Entry is obviously the super trend breakout or some retest, but whether you are to enter or not. But in most cases, almost 90% of the cases, you should enter and then manage according to that. So that is the idea of the whole strategy. So this is Solana. We looked at it's fine. Now let's look at oil, just so we make this all very. So oil price action is a lot different obviously than crypto. We have a lot of lines. Let's use a minute chart. So this is so this chart is not what marking step. Now, oil has very obvious volume spikes. So this is a very obvious volume spike. This is an again obvious volume. If you go back every day, you have an obvious volume spike. And on those volume spikes, when trends are happening, this- this- it is extremely pinpointed what we should do and how we should be catching those trades. And it's easier. So when the volume is dead, you are that much cautious. But when you see the volume MA is it's trying to rise, it's trying to form some sort of an upside. You understand there is a trend coming. It's trying to un- like you become ready at this point. So if you are ready at this point, let's say for example, if you are ready at this point and the volume keeps going up, you are going to catch this trade. This trade is alone going to give you a dollar. Again, going to give you half a dollar or something. Again, in this case, you understand what is going on in this period. The volume is going up. You are ready for the trade. The Bollinger Band is falling. Your RSI is flattening and trying to fall as well. You failed to break out above 50. A lot of signals. Your volume is rising. Uh, Divergences, like I said, they are immaterial. They are just a confluence. So at this point, but it's not a bad confluence at this point. So you can see the reversals. At this point, it is reversing. Next signal, yeah, you don't get a divergence still here. And at this point, if you exit, you are saving, I think, sorry, sorry, uh, 20 cents. So you're saving 20 cents even on the next one and the next one. So this is about conflicts. The RSI, the divergences are about conflicts. Some cases doesn't work. It divergence was created there, but yeah, it went further lower. But it creates an idea for you to when exit and mm, like take profit from your trade. Oil is much cleaner, as I said. Oil will be very easy to truly understand the strategy of the volume spike, about the Bollinger Bands. Like I said, if you zoom out, go zoom out, you'll see this is a compression. The breakdown happens. This is a compression. Breakdown. This is again a compression. Breakdown. Compression. Breakdown. We are having a compression. Either breakout will happen or breakdown will happen. We don't know. So compression breakdown happens. Compression breakdown happens. Everything is compression breakdown happens. Last few weeks has been bearish, so we are seeing a lot of breakdowns, but it is compression doesn't tell us what is going to happen. Either breakout or breakdown can happen. For example, this one, compression, huge breakout, then the correction. But if you follow the volume, you know the trend is coming. If you follow the volume, you know the trend is coming. Sometimes it doesn't work. So it didn't come. But yeah, it did come the next time. It did come again this time. The volume spike start here. You have a breakdown, you have a breakout, all within 12 hours. So that's what we need to catch. So we can we can trade environments like this, catch 10 cents, lost, lose 10 cents. But we should never be losing trades like this. So these are the trades we are after. So this is a trade from close to close is 120 cents. Again, the reversal from close to close is 195 cents. The time period in between is 11 hour 30 minutes. So in 12 hours, which is between the European markets and the US market, we are getting almost three and a half, like $3 plus, which is our weekly or weekly plus target. So if we get that trade, we have done enough. We should be doing in a week. So that's what we are after. That's what we need to do. That's what, and because it's oil, it's a lot more stable than which is sorry, Solana, or any crypto, for example. So the trends will be these smooth. Trends will be smooth. So when you are downtrending and you see this one, this one, this one, this one, this one, a lot of tries to get you out. But what you have to see is the trend, what is happening there. You need to stay in these kind of trades and not just take 10 cents, 20 cents, get out. That's not what we are after. That is why we need to trade close to close. That is why we need to trade very carefully. That is why we need to be very diligent in our work and closely watch price action. That is why we need to create confluence of a lot of like your first divergences is coming in here. But even after that, you have a 60 cent drop around that. Yeah, closing wise, you are not too far. This is close. So you lose 10 cents if you close here. But that's the decision you need to make because at this point too, your volume is still rising, your RSI is falling, your Bollinger Band has at this point, your Bollinger Band has taken a downturn, and yeah, you're obviously bearish on the RSI. But for examples like this, that is an ideal example. There are a lot of trades like this. So you don't really need to worry about this. You trade, you exit. You trade, you exit. You trade, you exit. There are going to be wins. There are going to be losses. That we understand. But it is objectively important to be better on average, and the strategy itself is it's it's doing that. It is our ability to be uh, being there with the strategy. So I think yeah, that's about it. The strategy is same here. All other things are same here. You don't need to be concerned about what is happening in larger scale of oil, like price action, market dynamics. All that is not to be worried about. But yeah, you can look for the AVF levels. You will have them on your chart. So if you are seeing movement on that level, you will try to take them. For example, last week, this for some reason it's not printing. So wherever it should be somewhere around here. So that level should be somewhere around there. So the breakouts from those levels were very important. We were trading long term as well. So the breakout when they are happening from area levels and breakdowns from area levels. When price goes there and breaks down, that's a very good additional signal for you. Again, look at it on confidence way. Like for example, if you put this low closer, you have a compression. You know what trend is coming. You follow the volume. You know what trend is coming. The volume is rising. You know what trend is coming. You have to be extra ready to catch that whole downside. This is a downside of uh, what 140 points. So 140 pips is a large trade. Even if we go with in the later when we are ready, even if we go with two lots here, that's a huge trade. That's a big trade. And if you go like if we build the confidence on this strategy, we can up that volume, we can up that size to any limits. But we have to build a record to track record to be successful on the long term and catch these movements the strategy is making, the obvious movements, and then you can do that. Anyway, thank you. Uh, Please go through all of this and let me know if you have any questions about what all the things we have covered here.